Welcome back to my YouTube channel, where we talk about investing in the market. Today I had to post a late night um, update video because earnings happen on my companies today, or a big majority of, and we got a lot of stuff to talk about. All right, so um, talking about Crocs. All right. Well, first of all, Crocs got hit. I think it opened. They reported before the bell, and it opened at around a little over $75 a share. And then the macro hit the market, and all the companies started rallying. Like the whole market started rallying. Even though Crocs is one of the core positions in my portfolio, yes, that loss has been overtaken by all the gains. In fact, I'll show you right now. Here's the day the day activity on my portfolio. No Fear Palantir. Excellent earnings. Everything's coming to fruition. The story continues to begin the quantifiable and quantitative factors of the thesis for Palantir. I think that we're just barely going to start seeing numbers and improvements in Palantir like we already have in this past earnings that was done. Crocs did do some recovering, but it got shut down from, I think, the day prior. Yesterday the stock was trading it closed at like 87, 88 or something like that, and then it opened at like 75 or $75 and like 20 cents or something crazy, and then it finished the day out at 82. So definitely some weakness in Crocs. We're going to talk more in depth about that and why, and what I intend to do, and what I'm thinking about as an investor in the company. These right here, I don't think I've mentioned this. In fact, I think this is probably the first time I'm disclosing my portfolio or whatever. So if you're watching, hey, good for you. So here's my these are PayPal call options, all right, which I'm tracking. I'm underwater on, but nevertheless, they're still over a year out. Those are long leaps. Planet 13, Tesla, and SoFi are my other holdings as well. So as you could see, even though Crocs had a bad day, it was just overtaken by all the green on all the other companies in my portfolio. So I guess that was nice. So I had a little boost in my portfolio. So even though there was a big boost in my portfolio for the day, I actually am not happy about the results, or the guidance, I should say, the guidance on Crocs and what's going on. Let's talk about that. All right. So they reported their earnings. They beat on EPS. They beat on revenue. And when I was looking at Earnings Whisperer this morning before the market opened, when I woke up, I saw that they beat on revenue and their EPS. But then, like, when the market opened and I looked at my, I looked at all my watch lists, I saw that Crocs opened at like 75. So I'm like, oh man, it's probably something to do with their guidance or something crazy. And I did get a hold of the first thing I was able to get a hold of is the presentation read ahead deck. And I did review that prior to the earnings call, which was released. And I looked at that presentation deck and I was not happy. But let's actually look at it. All right. So long story short, because I don't want this to be like a whole crazy long video, guidance for the year is lowered. And it's lowered to, they're guiding for the end of year revenue growth of 10 to 11%, from 12.5% to 14.5%. That's a dramatic decline. I think in hindsight, sure, on hindsight, they still did double digit revenue growth. I mean, that's good and all, but we have to be accountable for looking at the thesis, looking at everything as an investment, and looking at management and how they're handling things. Um, so, as you can see, the the decline is due to this Hey Dude right here. Um, these Hey Dude numbers. There's a lot of stuff happening that's going bad with this Hey Dude business. All right. Um, so let's look at it. All right. So pretty much, I listened to the earnings call, and Hey Dude is just it's going downhill. All right. Wholesalers. There's a bunch of reduction in wholesalers. They're consolidating. Crocs is consolidating the logistical chains right now. So there is a decrease in the actual wholesale distribution of Hey Dude, as you can see here on page 21 of their read ahead slide deck. I think that this is this is in turn both to canceling on the wholesaler side and canceling on the Crocs side. They're trying to shift more direct to consumer and consolidate towards wholesalers that are in more demand areas and less mom and pop shops and more mainstream, bigger retail chains, if you will. Africa is a disaster for Crocs. There's a lag here, so there's some gray market sellers in Africa that pretty much hit the revenue for Crocs. Not much of a disruption, but it's definitely having problems. Definitely causing problems on your average sale prices of what the Crocs brand can demand for their brand, because these gray market sellers, they'll get the Crocs and they'll sell it for cheaper on Amazon from Africa because there's less overhead over there, and through the little loophole supply chains that they have, they're able to get away with that. So what Crocs is doing is they're pretty much they're cutting out all of them. They're pretty much cutting Africa off, or most of it anyway. And it says right here, decline largely by curtailment of significant African distributor believed to be diverting goods to the U.S. gray market. So this is Crocs cutting them off. So this is a quick, I'm going to take a hit to, like, the management strategy, from what I understand, is we're just going to do a quick, I'm going to take a hit to all of this. We're going to lower revenue guidance, and we're going to reconsolidate our supply chains and distributions to where we can get back to healthy, organic, natural growth, and not some sort of growth where it's in vain because there's some great market stuff, there's bad stuff happening. So and then they have to protect the brand by doing that as well. So here's the thing about this is a break in the fundamentals, if you ask me as an investor. And believe me, I'm a shareholder, so I'm entitled to have an opinion. I got a position here too, right? So you got the Crocs shareholders here. Hey, just heads up, I'm on your side, okay? There's a break in the thesis here. All right. First of all, management has to own up and pretty much, hey, we made a mistake, or they made a mistake, pretty much dealing with the wrong wholesale distributors or what have you in Africa. Trust needs to be earned, not just automatically given. And I mean, we don't know, even in the earnings call, from what I heard Andrew say, from what I understand, is they don't know how much inventory these gray market sellers still have. So we're starving them out. At least the Crocs management is starving them out by cutting them off from distribution, so that they can just, with whatever inventory they have left, they'll just sell through that. and hopefully they don't have some knockoff factory somewhere. That's one of my biggest fears, but I don't think so. I don't think so. They'll probably move on to another scam. Um, that would be a lot of work, wouldn't it? So Asia looks promising to me. The growth in China is it's just good. I mean, I think they reported about over 90% in China. Let me see here if I can. Well, here's the aggregate CAGR numbers for all of Asia, which is the promising continent of our expansion. Which they've, even though the Hey Dudes are having issues, the management has expressed that they still intend to launch the Hey Dudes brand international. I got some worries about that. If we can't even get it right at home, and I mean, with all this stuff happening, I don't know about all that. But yeah. So I mean, yeah. So here's another one of the highlights that I wanted to point out. They paid down $90 million of debt, and they bought back $150 million worth of shares. I think this was probably the saving grace of the whole, of protection of the stock, and it not going down to like $60 a share or whatever. It opened at 75, but it quickly rebounded to back up to like 82, 79 by the end of the day. So I think we bleed back down into the 70s. Maybe we hit 75. Maybe we go down to $70 because there's no positive catalyst coming up for the next earnings. Another guide that management said was they didn't guide it, but they pretty much said expect Hey Dude revenues and margins to be hit for the next 3 quarters: Q4, Q1 and 2 for 2024. Pretty much the first half of next year as well. So this is going to take them 3 quarters. It sounds like this is going to take them 3 quarters to clean this mess up. This Hey Dudes issue. I mean the Crocs gray seller market in Africa, I think, is a little more smaller than the Hey Dude issue. I'm not really too worried about once they cut those distributors off in Africa, then we'll be fine. But the whole Hey Dude acquisition, how this is all going, has got me a little bit worried. Andrew has re-emphasized that the management still believes in the Hey Dude for the long term. So I mean, yeah, we'll see what happens if they can turn this Hey Dude around. This is the question: can they turn Hey Dude around? Can they fix this whole mess? Can we get back to regular, organic, healthy growth? All right. If it weren't for Hey Dude, we should be doing well over double-digit revenue growth quarter after quarter. All right. I mean, that's just the way I see it, at least. If someone in the comments maybe correct me if I'm wrong, but you know what? There's merit in the diversification in their portfolio, and we're seeing that with these different slipper Crocs and different SKUs. Okay, but I mean, I don't know if it's necessarily a product issue. I don't think it's a product issue. I see a lot of people wearing these Hey Dudes shoes, and apparently it's really popular. A lot of people love that. And the people that wear it, they're buying multiple pairs too. So I don't know. I don't think it's a demand issue. They're number 7 on the most popular brand for shoes or whatever. So if all we need to do is all the management needs to do is refocus this. See this? I mean, it's ranked number 7 footwear brand, and brand awareness is up 32%. So people like these Hey Dudes. All right. So my thought process is I don't know what I'm going to do yet. I'm going to sleep on it. I have to do more research on, how do I feel about, or how do I think about how the macro is going in these different countries of expansion. Look at the consumer. I think the consumer is fine because they're not spending on cars or anything like that. So they still have access capital a little bit, or not even capital. They have a little bit of money. But I mean, I'll have to look more into it because people are still buying shoes apparently. So they still got the buyback going. So that's that's a saving grace right there. So yeah, that's pretty much my take on the earnings for Crocs. I'm not happy about it. And if there's investors out there that don't like what I said, I mean, I'm one of those people. I am not going to be in denial about. I'm not one of these people that's going to be in denial about of things that I'm invested in. I'm not going to. This isn't going to turn into a sunk cost situation. This is something that you got to research and etc. So more to follow. I'll put out another video later on, not today, but sometime maybe later this week. But yeah, what do you all think about the earnings, Crocs? I mean, I intend to either way. I'm holding my position right now. There's no way I'm selling at these valuations. It's too cheap for me. Even after this, the stock is cheap. But let me know what you all think about the earnings season. Crocs, if you're invested in it, what do you think about the company? Comment down below on anything. If you want to see another video on another company's earnings or what have you, let me know. I'm very interested in having more interaction with the audience. Shout out to LT Cho. All right. If you're watching, thank you for being a subscriber. And shout out to everybody else that's getting value out of this. And if you're new here, consider liking and subscribing. Thank you very much, and have a good rest of your week.